Right, welcome everybody. My name is Mike Hamilton from Trade Easy Way, and here on the 9th of March we are just gone 2 o'clock in the US. Don't forget the US has put their clocks forward already, so there's only 4 hours between London and New York right now until the end of the month when the UK goes forward. So notable data this week is UK and US GDP. I think we've got US inflation as well. Anyway, let's just get into these markets straight away. So what should we be doing in the markets right now, given what's been happening over the last couple of weeks? So we've not only have we got this flight back into the dollar, we've got a new Fed chair kicking off. Not sure when he starts, but Kevin Walsh has been put forward. He is going to be in a bit of a going to walk a bit of a tightrope, because we've already had 3 reductions in US interest rates, with inflation potentially really kicking in, and a lot to get hold of. He's not a great crypto fan, although he does acknowledge that Bitcoin is a store of value and the blockchain does have a place in the future of finance. So with that in mind, let's just try and take these markets apart and talk about what we could be doing right now. I'm also going to add a little section on ISAs as well, particularly as we're coming to the end of the tax year anyway. So dollar index dominated by the euro and the pound as major parts of this index. So if we go back to November highs and put some ratios on this, you can see all we've done is actually pulled up into a pullback zone. In other words, if we start failing here, this could drop back. This is a strong push to the upside on volume, no sell signals, so therefore with the dollar index above the 50-day average, expect higher numbers at this stage. Now, for those of you who have been listening to me recently, you'll know I've been talking about what I think is behind the war, and I think unlike previous wars where it's been dominated by oil and power, I think this has got a lot to do with US debt. Why? Because the US is racing towards 40 trillion worth of debt. 10 trillion of that's got to be refinanced this year. So if you've got a bond market that has been dropping hard, a war pushes people out of stocks and into bonds and supports a cheaper rate to service your debt. So that's behind my theory. Also, the other side is you've got to bear in mind that the US is a net exporter of oil, so a high oil price favors the US. Okay, so dollar looks higher. On the back of that, we've got commodities, because obviously in a war like this, with the Strait of Hormuz blocked, or certainly heavily restricted, insurance premiums going through the roof, hence the reason why there's so little shipping going through the strait at the moment, and the oil price is flying. You can see commodities are really picking up on this. So this is wheat. We've just touched 645. We've been languishing down here at 5 for quite a while. All through most of last year we were doing precious little. Last time we had a spike was May 24. So that's next stop is $7. So I think this wheat is worth a pullback. Any push into 570 I think is viable, and I'm looking for this to power up to 720 and through into $8. And if it runs, so if this breakout pattern down here works, then I can see this pushing to can see it's pushing through the 720, it's 786, right up here, obviously in a wave pattern, not straight up. So plenty of time to think about getting in this if you want to get in. And let's see if this can wind up. If we start closing underneath $6 anytime soon, opening and closing under $6, then this could just be a spike higher that's got sold into a fake breakout, and this is going to come back to 5, and who knows, possibly even lower. But I think the war, fear, and a prolonged period of a low price of wheat is going to affect planting patterns, and I think potentially you've got El Nino kicking this year as well, which could affect the weather patterns. So if that's so, then I expect this to come up. Right, let's move on. Gold. While we're on the subject of commodities, let's look at gold. So here we are. Let's put this on hold a second. I've got so many things open on the screen. Bear with me. Right, got it. So stronger dollar is affecting gold. We've got a lower high here, but look how this 50-day average is holding. So not tested it yet. So if we see 49.50, possibly 48.50, back into this support zone. We're down here in February. If we pop down there and hold on volume, and these volumes hold up, and expect this to wind up even with a stronger dollar. If that happens, then the last time we saw that in a significant way, it was 2008. We all know how that ended up. So this is why I've been getting more and more cautious for these markets, and something to watch out for. So strong dollar, pullback in gold, which I think is still viable. May see I would expect a deeper pullback. We've got inflation and GDP this week, so let's just see how that goes. Silver. Silver's already pulling right back into that 50-day average. So if this holds, let's put the ratio on this. I'm liking silver more than gold, actually. 77.80 is the pullback area for that. If we see 77.80, I'm in. I'm just wondering if we're getting higher volume here on this pullback to 79.50s, 80. So I think I might even try and get in here if we hold this. So I like silver. Following on from what I said about crypto. So here was Bitcoin down here on the 6th of Feb, down here at 60,000. That's the breakup area from October 24. I think this is the bottom in crypto, in Bitcoin. I think we will know if we can close above this pattern. So if we can close above 70, I think the bottom is potentially in. What Bitcoin needs is liquidity. Like any other market, it needs liquidity. So if money's coming out of gold, and if the stock markets do hold up, not necessarily rally, but just hold up, I think that gives Bitcoin an opportunity to push up. Bitcoin tends to be like gold is to silver. Bitcoin is the store of value, and Ethereum, which I'm in, tends to be the workhorse of the cryptocurrencies. It's more flexible and more amenable to industry than a restricted market like Bitcoin. All right, well, that's what I mean. Talking which, let's look at BMNR. This Bitmine just momentarily. Anyway, the ticker's PMNR. I momentarily gone blank about the name. Bit immersion technology, something immersion technology. They own $80 billion worth of Ethereum. So we're floundering around here in a tight range under the 50-day average. A recent touch of 22 was sold into. If we can hold 20 and ultimately close by 22, 23, expect this to really push up. So that I'm in BMNR. Just got a small profit in there. Bought about 19.5. We're currently 20 as we stand at the moment. So let's just go right through some stocks to avoid. Avoid anything with an Asian exposure. Prudential has an Asian exposure. It's a good stock. It's been on an incredible trend since I started getting in here. Got out a bit too early. Didn't make the most of that move to the upside, but did well. This is a lot of support down here at the big 10. But I'm steering clear because of its exposure to Asia. And other examples of stocks to be aware of. Let's look at EasyJet. So high oil, and obviously the airline industry is taking a hit anyway. So we are coming into November 23 support. We're coming down on volume. So at the moment, there's a bailout happening with EasyJet, and no sign of that halting at the moment. So be very careful. If this breaks 390, we're going to see 340 pretty quick. SSP Group, the sandwich maker, airport, retail food sector. This at the moment I can see this coming back to 150. We're currently 180. A lot of selling going on. It struggled up here before the war broke out anyway. So these are things, anything with any travel and Asian exposure is to be missed. So if oil is, let's have a look at oil at the moment. So oil's just about trying to touch 90 now. So we gapped up to just over $100, 101, touched 115. Here we are, just coming right back to the breakup area. So we closed on Friday around about 89.50, 89.60, and here we are, not far off that now. All right. There is actually a glut of oil in the world, so but the problem is that the Saudis and so on are struggling with production issues, so there is problems down the line, and the market's pricing that in. If you are interested in oil, here's a little minnow that's been struggling but has really woken up on the back of this. This is Tullow. I would have, if you're in Tullow, great. If you're interested in getting into the energy sector, I will look at some other scans on this and talk to you about that soon. Let's get back on track to basic UK stocks. This is Shaw in the banking industry. So we've just, I think today even, gone right back to, sorry, you can't see this. Let me do a weekly chart, hang on. That just about helps. You can see on this weekly chart, we were here in November 25. This is a IPO from October last year. So I am not it. I've never traded this at the moment. I've been watching it. I take that down. That's right. That's the November lows, which we just touched today. So you can see all very low volume at these highs, lower closes, a lower high, predominated by lower closes, more red than there is black. and finally we've gone right back to base. So what's interesting here is the volume is now low, having boomerang right back to the breakup area. Volume's low, so I'm getting interested in this, but I'm going to need a decent close on higher volume before I get back into that one. And I've been monitoring Glencore, has had a decent pullback, 480, well 480 is a 50-day average, it's not there yet. So if you're interested, I think this is viable. It's recently 550. It's not a chart for me because I hate buying high, and that's not a deep enough pullback for me. If we look at Rio, that's a much deeper pullback. This is why this is why when these stocks are very high, I just avoided and backed off. They are coming back into support now. If you're interested in Rio, I would look more around the 60 mark. We're currently 66. Right, let's look at, talked about Avon. So I hesitated on this one. This has come up from 1650. That's recently touched 1940. Defense stock. I would 1750 is my target entry now. So we get another pullback around 1750 mark. I would be in if it runs. So be it. I'm going to look at some US stocks now. I'm very interested in Amazon. I would love Amazon to come down to that 19,780 again. The market didn't like its, I think it was a 2 billion, I can't remember, huge investment in AI. So it dropped hard here on the 5th. You know what, I would look for that, the low of the 5th again on that one. I think that can boomerang back down to those lows. Netflix is doing all right. I actually took Netflix off. I got back in, got in a little high, took a bit of heat, and it zoomed up here. I will get back into Netflix on a retest. Well, you know what? I'd love to see it back down at 80. Not sure it's going to do it, but it might do, given the volatility we got. Like Netflix, Amazon I talked about, AMD. A lot of these tech stocks are still too expensive for me. I'm watching this one. It's already had a heap of volume come down here. Look at this. We dropped down here to 100. And look at the volume that's come in. So this is an interesting time to look for this sort of thing. If something comes down and gets a significant lot of volume over a number of days, get it on your watch list, because I think these are worth it. MU. I'll tell you what, I was scanning before. So I picked up QCOM because I think QCOM is, yeah. Let's just clean this up. So it was 205 recently. So April, this is almost boomerang back down to the Liberty Day, April last year. This has really got my interest. If we can sustain this level up here and the volume picks up, I'm going to be buying into QCOM. I'll do a little bit more homework on it, but that's what I'm interested in. Microsoft. It looks if it's trying to bottom here, but I would like some deeper numbers. And what else have I got? Let's have a deeper look at. I'm just going to change subject for a minute. I'm just going to look at commodities. That's orange juice. Orange juice flew last year up to 54.5. We've gone right back to 15. That, you know what? I wish I'd have seen that. You can't actually buy Orange juice is a difficult one to trade if you can't trade the futures in it, because there doesn't appear to be a ETF on this, or an ETC. Natural gas. So typically this gas would start to pick up in June, July, and then run like crazy into November when all the mainstream contracts. So that's a significant drop here. So I'm going to stand back and hope that comes into about 25, 26 on natural gas. Now copper, high grade copper. I did a scan on miners today. I've not picked up on one that I'm interested in yet. FCX is the typical one in the US. I'm going to just keep scanning some miners because the report out I've seen about how a lot of the copper mines are pretty much running dry now, and yet copper is the new oil with electric move towards electric cars. Particularly the spike in oil might do more for that. So that's why I am interested in that. Right, let's leave that for now. There's cotton. Right. Let's just talk about ISAs then. So you've got two types of ISAs. You can do cash ISA. There's three types of ISA. You can get a junior ISA for children or grandchildren, and you can get an investment ISA. An investment ISA, you can get two types as well. There's self-invested ISAs, stock ISAs, or there are managed ISAs. Now, I've not got any experience of managed ISAs, but what I would recommend you do is there's organisations like Interactive Investor, and these guys, I mean, there are some other good ones out there. If you do some comparisons to prices and performance, and then take it from there. But basically, I would, if you really want an easy way of getting into these, on the whole, organisations like Interactive Investor and the like are pretty good. You can get some stable growth out of these, and I think you can expect some reasonable results. This is, they got three types of plans. £6 a month, 15, £40 a month. Anyway, I can't say much more on that because as far as the managed ISAs are concerned, because I just don't have the experience of them. But have a fish around and see what they're offering, and even talk to them. I think overall the only real way of doing a fuller assessment is to go to an IFA, independent financial advisor, because I think what happens is they can recommend one that will suit your personality, suit your goals, suit your timescales, and yet it won't cost you anything because they'll just take a commission out of the money they get when you set up an account. If you recommend one and you set one up, then they'll get a commission out of it. So I'll just keep searching. You even use AI. I like Claude, the Anthropic AI. You can really don't just say what's the best managed ISA. For those of you experienced in AI, you can just probe them deeper and deeper, push them, get them to make comparisons, get them to look at performance and costs and so on, and then see what they say, take it from there. But that's the only advice I can give on ISAs. All right, so just to recap then and finish off, I'm avoiding anything to do with Asia. There are a lot of opportunities with oil. Let's look at BP before I go. Yeah, so here we've got BP above £5. So it was languishing down there at 321 in April last year. So if this pulls back to 475 and you're interested in the energy sector, so it pulls back to November's peak. In fact, it's just done that a few days ago. Just did it on the 4th. Yeah, I don't think this is going to charge off. This is a bit of a slug. This is a slow grind. So if you're interested in the oil sector, look at things like BP. If you want something more exciting, then look at the smaller ones. All right, but I'm avoiding travel. I'm avoiding airlines. Very cautious on the. Well, I'm not in the consumer side, but I am looking to dip my toe in some of the tech stocks. A lot of the US tech stocks are still way too expensive for me. I'm interested in QCOM. I'm in Ethereum with that BMNR, and yeah, just generally just nice and cautious, easing back in the markets on these dips, but not really sort of going gung-ho, just being very cautious. All right, any questions, let me know. Keep posting in the room, and hope that helps. Bye for now.